Good afternoon. I want to welcome everyone to today's Learn at Lunch webinar. We will hear from Extension Crop Marketing Specialist Dr. Todd Hubbs as he discusses the U.S. Renewable Fuels Standard and its impact on commodity markets. If you have questions during the webinar, you may ask them through the chat window by clicking on the chat button at the bottom of the screen. For more farm management resources, visit the eFarm Management page. I will share the link in the chat window. Dr. Hubbs, I'll turn it over to you now.
Thank you, Brett. Thanks everybody for turning out. Spent about 20 minutes here going into the renewable fuel standard. This is going to be at a pretty basic level. If you want any more complex questions, always feel free to contact me. So we're going to talk about the RFS, basically how it works, and then the impacts on commodity markets, particularly ours in the ag sector. So let's go. So I was telling Brent before this started, it's been almost 20 years since, well, it has been 20 years since the RFS passed, and it's quite astounding to me. I've been doing this for the entirety of the RFS. It has created big changes in not only our fuel markets, but our ag markets. And so it was legislation in 2005, and then again in 2007, they passed a more expanded version. This is when biomass-based diesel really came into its own in 2007. So what it does is it mandates specific volumes of renewable fuels into our transportation fuels. And these things are called our renewable volume obligations, or RVOs. So if you hear somebody talking about the RFS and RVOs, what they're talking about is the amount of renewable fuel that has to be blended in to our gas and diesel. And it's separated into four major fuel categories: cellulosic, biomass-based diesel, total advanced, which is sort of a catch-all of anything that's not cellulosic, biomass-based diesel, or ethanol, and conventional biofuels, which is basically ethanol. So the EPA is supposed to, and I say supposed to, annually set percentage standards that translate into volumes that obligated parties are supposed to blend into fuel. They tend to pass these now in 2 to 3 year chunks, so everybody has some understanding of what the blending percentage standards are going to be over a long haul. But there's been a real problem with them, the EPA, not getting it out on time and creating all kinds of uncertainty in these markets. And this year is no different. We can talk about that a bit later if you want. So how does the mandate work? It prioritizes biofuels based on greenhouse gas emissions. So most of these biofuels are supposed to do a 50% greenhouse gas emission reduction. While the RFS does help the ag sector, it's not predominantly like an ag support program. When I think about the RFS, I think of like three stakeholders that fight the most over this policy. It's environmentalists, ag, and energy. And those three are sort of linked together in how the RFS works. So each fuel has some equivalence value that's standardized by energy content. So ethanol, because of how it's made, mostly from corn, using natural gas, it gets a 1. So when you create a gallon of ethanol at an ethanol plant, and I'll get into the RINs in a little bit, the producer gets 1 RIN. Biodiesel is a 1.5. So when a biodiesel producer for methyl ester, your traditional biodiesel that's mostly made from soybean oil here in the heartland, when they create a gallon, they get 1.5 because that's its equivalence value. And renewable diesel now, under 2006, 2007, will get a 1.6, but it was a 1.7. So there's a lot of regulatory flexibility. Well, not a lot. There's some regulatory flexibility in the mandate structure. The EPA can modify the mandates via waivers, and I will talk about the specific waivers they have at their power a little bit later. But they can if there's production shortfalls or economic or environmental concerns with the RFS. The mandate was only set in 2007 through 2022. And after that, and as you can see, we're in 2025, it's up to the EPA to set the mandates. So the EPA has quite a bit of latitude these days on how they go about setting the RFS mandates. All right, can everybody see this? So what's the compliance basics in RIN? So all refiners and importers of fuel that are registered with the EPA, which is basically everybody, must meet their RVOs. And to do this, they have to acquire and retire renewable identification numbers, or RINs. So RINs are like the currency in this market we built for the RFS. And they're credits that are generated when a renewable fuel producer produces a RIN or a gallon of like ethanol or a gallon of biomass-based diesel. They'll get the requisite RINs. And that RIN gets attached to the fuel. I got a graph that shows how it works here in a minute, so don't get too worried about it. Each renewable fuel type has a unique D code. So D3 is for cellulosic biofuels, D4 is for biomass-based diesel, and D6 is for ethanol. So when everybody's talking about D4 RIN price, they're basically talking about the price of renewable identification numbers for the biomass-based diesel category inside the renewable fuel standard. And each of these D codes has different price over time based on trading. So I'm not going to get into how the EPA goes around adjusting the percent standards. That's pretty complex. But each obligated party has to calculate their own renewable volume obligations based off the EPA standards. So when the EPA puts out a percentage level that they estimate before anybody does anything, each obligated party has to calculate how much they're going to meet based on how much diesel and gasoline they produce. So that's the very basics of how it works. Here's a life cycle example, and this is from EPA, and it's a pretty nice graph about how it works. And as you can see, a renewable fuel producer, when they create the fuel, they'll attach a RIN to it. And a non-renewable fuel refinery or an importer of fuel, you have this non-renewable fuel, and they incur a volume obligation when they produce this fuel and send it out. So a gallon of gas will go up. It'll get blended, usually up, like, let's say we're talking about ethanol, 10% of ethanol. When they blend it, they separate that RIN. So the blender, who's under the obligated party, the RIN rides with the renewable fuel gallon, gets separated, and either gets retired or sold by the obligated party. And then the blended fuel goes out to us. And I don't know how else to say it, so I'll just say it. All the research we've done on it, it's basically completely passed through to the consumer. So no one ever asks about how the consumer feels about it, but there you go. So that's how it works. And basically, if you're an obligated party, you have to go out and get these RINs and either retire them. And if you have a surplus of RINs, you can sell them to someone who needs them because they haven't collected them. And it's all done through blending. So I'm going to just talk and show this graph on D4 and D6 RIN prices, because for the markets we care about the most, biomass-based diesel, for all the vegetable oils and fats and greases, and D6 ethanol for corn and sorghum production. This is what the RIN prices have looked like over time since they really started tracking them through the EPA's EMTS system. And you can see D4s are running high. And then this is, I'll talk about this a little bit later, but D6s and D4s run together these days for the most part because the actual volume obligation mandate is above how much ethanol we need to blend into the fuel fleet. And I'll briefly talk about that later, but they will run together because since the obligation is above how much we actually need, we have to use biomass-based diesel gallons to make up the difference. So when anybody's telling you like the D4s and the D6s are running together, why is that? It's because on the margin, the marginal gallon to meet the RVOs is a biomass-based diesel gallon. The other thing you can see in this pattern is there's periods where it pops and then it goes down significantly and pops again. These are usually around when the RVOs are set because they have tended to expand them and everybody either wasn't ready or it caught people off guard, or because they can pass through the cost completely to the consumer, they just wait till the higher volume obligations are in place and run it. But that's the basic price pattern for D4s and D6s. Right now, we're a little bit above $1. All right. So the RIN trades. RINs can be traded among obligated parties or third parties. So there's a whole, now you and I can't do this, but they can. They have this market where they can trade RINs amongst themselves. And RINs are valid for a compliance in the generation year and the following year. So in essence, the way the RFS was set up, they allow people to bank RINs so they don't run short. And it's in theory supposed to make and it does for the most part, make the program run smoother because you don't get these shocks when people are out of RINs. You can carry RINs if you made more into the next year and retire them then. They can also carry forward deficits for a year, if not longer. And there's cellulosic waiver credits that offer alternative compliance options. I'll talk about this here in a minute, but cellulosic has never really made it. And so they're always waiving it. And this gets to the waiver authorities. They can, if there's they can reduce the cellulosic RVO if production falls short, which it has almost always done. Now, I've always said cellulosic biofuels are sort of like the fusion of the biofuels world. It's always 10 years away. We've spent, I don't know how much money researching and trying to make cellulosic happen, switchgrass, you name it. It's just never been able to scale. Maybe it will one day, but it's just not there. So they tend to waive it, whatever's left over. There's a general waiver authority if they feel like the RFS, can cause severe harm or people can't make the domestic supply. And we sort of saw this under the COVID lockdown. They lowered the volume obligations. There's a biomass-based diesel waiver. They can reduce it up to 15% for 60 days if if there's severe feedstock disruptions or price increases. They're not going to do this. I'd be very surprised if you ever see this one come into effect. And then there are small refinery exemptions. And these are a level of argument and fighting in court cases that have been surrounding the RFS almost since its inception. Written into the law is small refineries, and those are with 75,000 barrels of crude oil throughput annually. So if you're a refiner or you're a cracker and you don't put out more than 75,000 barrels of crude oil, you can petition for an exemption if it's giving you economic hardship to meet the RVOs. And there's been numerous petitions. And under the first Trump administration, they granted a bunch of them. Renewable fuel people want those what are called reallocated. So if you grant an exemption, they'll go in and take them out of the RVOs and it'll change the percentage volume standards. Very complex how this works, but that's basically how it works. And so they want them put back in either current or future years. It's called reallocation. And there's big fights over should SREs be granted. The court cases say they have because it's written in the law, and it seems like small refiners tend to win these court cases. If they do win and they're granted, renewable fuel producers want 100% reallocation. In other words, every gallon that they've exempted, they want put back into the RVOs. Big fights over this. It's never ending, it seems like. There's been some real implementation challenges around the RFS over time. Because one, I mentioned it, cellulosic biofuel shortfall, never they've never made cellulosic ethanol or any biofuel really to scale. It's relied mainly on landfill gas breakdown products. I didn't mention it earlier, but renewable natural gas stuff out of landfills or even out of methane digesters can count inside the RFS for cellulosic biofuel. Excuse me. The E10 blend wall limitation. So there is, in essence, a 10% ethanol cap on gasoline. And when the mandates exceeded it, and you'll see it in the next graph, and I'll talk about it in detail, it limits it as the fuel consumptions decline. So the conventional mandate has been 15 billion gallons for years. We don't need that much at an E10 level to blend into our fuel supply. It's more like 14.25 billion to hit it. So, like I said, it causes issues. The political and economic conflicts around this have gotten a little bit ridiculous. When the Congress writes laws that don't sunset, I think this is what ends up happening a lot. Fights over policy and who benefits. And those three groups I talked about before that seem to spend the most time fighting over the RFS. And then the pandemic, we had everybody was locked down and it prompted them to lower the RVOs. So to give you guys an idea, and I hope this is coming through to where you can see it. The vision, this graph on the left side here, when they wrote the statutory for the renewable fuel standard, the vision was that cellulosic ethanol would do this. By 2022, we'd have 16 billion gallons of cellulosic. The reality is over here. As you can see, that didn't happen. Now, we kept with the 15 billion of conventional, and we kept expanding the biodiesel. So because the nature of how biofuels are made and scaling and the supply chains around them, it's sort of reverted to ag commodities and ag resources to generate the biofuels to meet the mandates. Cellulosic is just not there. I know, and it's not going to be there anytime soon. There might be people doing research on it at every university in the country, but I haven't seen it be able to scale for wood chips or corn stover or anything, honestly. Well, hopefully it will someday. So as you can see, this was the dream, the statutory. This is the reality. And that's why those waivers were so important. All right. In June of this year, the EPA released the proposed volume requirements for 26 and 27. We had some from 23 through 25 that are expiring at the end of the year. They still have not finalized these volume requirements, not even close. But these are them, 1.3 and 1.36. Now, I think they'll actually meet the cellulosic biofuel requirement because corn kernel inside the ethanol grind has been allowed to get a D3. And so some ethanol plants that are generating D6s are also generating D3s because they're using corn kernel fiber. Perfectly legitimate. That's going to help us hit that number. Biomass-based diesel's way up. And when they talk about the conventional mandate, I just put this here. It's always 15 billion gallons. It's 24.02 minus 9.02 gives you the 15. So total renewable fuels 24 billion gallons, slightly over for 2026. The advanced is 9.02. The nature of the RVOs and the RINs is a D3 RIN can be cashed in to meet the D3 mandate or any other. A D4 can be cashed in to meet the D4 mandate, biomass-based diesel, or the D6, the conventional mandate. Same goes for a D5, but there are very few D5s. It can be cashed in to meet the D5 or the D6. They're nested. The conventional D6 RINs that come from ethanol can only be used for D6 compliance. Hope that makes sense to everybody. But these are quite a substantial jump in the proposed RVO mandates, but it doesn't look like because the government shutdown, they're going to get finalized before the compliance year starts. So, recent developments. I will say this for the Trump administration, they are making some serious changes this year. As I said, the RFS is under, there's no sunset clause. So beyond 2022, EPA is using rulemaking under the Clean Air Act. And the Trump administration this time, when they put out their RVO setting in June, did some stuff nobody's done before. They changed the renewable diesel in the SAF from a 1.7 to a 1.6 RIN, which puts it more on par with traditional biodiesel made from fatty acid methyl ester of 1.5. So that's going to mean they have to produce more to meet the D4 RIN. They also proposed a half RIN rulemaking on foreign fuels and feedstock. And this one could be huge. So they basically said it's within their right to say, we're wanting to encourage domestic production of biofuels and using domestic feedstock. So if you use a feedstock from overseas or import foreign biofuels to meet the renewable volume obligation, you're only going to get half of the RIN you're due. So if you were importing renewable diesel and you were supposed to get 1.6 D4 RINs, you would only get 0.8 if you imported the fuel or used imported feedstock. It's a big deal. And they've been settling the SRE backlog under the Biden administration. They didn't do anything with all the small refinery exemption petitions. And the current EPA, for the most part, has gone through the backlog, settled them, and set up reallocation for future years. And I say if such an issue can never really be settled, because when they gave the small refinery exemptions for like 2018 and 19, they basically gave those small refiners 2018 and 19 RINs, which are worthless. So that's not probably going to go to court. That's going to court. So this thing's not over, not by a long shot. But that's some of the new things that happen. So very interesting times if you're interested in that kind of stuff. So again, probably why people are more interested is how does it impact ag markets? It was a strong new demand for crops linked to biofuels, a major demand and price shifter. And we've seen that inside of acreage. I just put corn and soybeans together here. This is 1995 through 2025, basically. And you see the growth in corn and soybean acres that occurred after this policy went in place. Now, wheat's been on a long decline, and I say small grains here. When I add small grains up, it's all sorghum, rye, oats. You guys know what small grains are. They've also been on a decline. It's not expressly due to the RFS because those of you that are old enough to remember Freedom to Farm in 1997, complete change in policies, sort of started us down this path. But there's little doubt that the RFS accelerated this. Now, to be fair, I've always said, yes, for corn in particular, and a little bit so for soybeans, the RFS was a major driver. But soybeans also benefited from China, emerging as a major, major importer. So we were sort of blessed in a sense to have, when we were up in corn acres to generate ethanol before biomass-based diesel really took off, we were able to rotate in with soybeans, you know, uh, to export. So it was a nice little period there for us. Corn use for ethanol, I've got here, you can see it take off, right? I've got data going all the way back to 1990. We were always making a little bit of ethanol. For those of you that weren't around, why did the RFS come around? Energy security. Also, ethanol is used for the blending industry is more of an octane enhancer. They used to use aromatics like MTBE. Some of them got outlawed. I think Condor eggs in California. There's numerous issues with aromatics. They're highly corrosive, and they were sort of moving to ethanol anyway. Um, but the RFS really like put it on steroids. And I made a little calculation over here. I call it the ethanol acres. So it's saying how many billions of bushels of corn were used to produce ethanol divided by the yield for that given year. 2012, 13, we had a crop shortfall. So we used a lot more acres of ethanol, but it's been pretty stable around 30 million acres worth of what I'm calling ethanol acres over the last decade. It's also sort of a problem in that, and this is why you hear so much discussion about E15 as productivity continues to increase in corn production, and we're looking, when we got these low prices, we're looking for more acres that are pay more. This idea of E15 could help significantly help keeping corn and corn acres at least flat, if not increasing a little bit. I'm not sure E15 is ever going to make it across the plate, but we'll see. Soybean oil for biodiesel, it's increased dramatically. Before 2020, in this period right here, it was all what we would consider the classic methyl ester biodiesel. But in this period right here, we started to see the renewable diesel boom occur, where a lot of traditional refiners, I'm over my time here, so let me hear it, came into the space and renewable diesel selling to the LCFS programs out in California really exploded. So we've seen this go up significantly. But the main point is this, and I think everybody can see it here, why it matters. It's basically a level shift in nominal prices for all crops, not just corn and soybeans. I got wheat over here. Because of the nature of how acreage has shifted and the competition for acres, it was basically a price level shift for all crops. Now, it benefited corn a lot, beans as well, but everybody got caught up in it. And a decline in corn acres and a decline in the need for more corn acres is a real serious issue in the long run, really. So we'll see how it all plays out. But this current RFS RVO is pretty bullish ag. Thank you for your time. I went way over, so I'm sorry, I apologize. But if anybody has any questions, please let me know. No questions?
Well, thank you, Todd, for presenting today and talking to us about the renewable fuel standards. As Dr. Hubbs shared he has the QR code for our survey, and I also shared that link in the chat window as well. It'll help us out a lot if you'd fill out the short survey. Thank you everyone for joining us today. I have not scheduled our January webinar yet, so I will let everyone know once that is scheduled. So we will see you sometime next year. Thanks again for joining us, and I'm going to wrap up our webinar now.
Thank you all.